Well, stock markets around the world are feeling the effects this week as U.S. President Donald Trump unleashes even higher tariffs against trading partners. It's creating uncertainty for investors. So what does this mean for your money? We're joined now by Peter Sashecki from Everything Financial with some insight. Good morning, Peter. Good to see you.
Good morning.
Yeah, so a roller coaster ride doesn't even necessarily describe it. I think for a lot of people, global stock markets have certainly been impacted and continue to be this morning. So how would you describe what is happening to the markets right now?
Same stuff, different name. We've had so many of these instances in the past that are worse than this. It's just this is the worst one since the worst one 2 weeks ago or something like that. So it's really, if you're not retired and you're not retiring for a while, just sit back, relax, and let things recover. But if you're taking money out because you need income, that's where you have to kind of strategize on what you're going to do, because that's what, if you don't do it right, that's where you'll feel an effect.
Yeah, so let's talk about that a bit more then. So what do people do if they rely on their investments for income? What are their moves right now?
Well, one thing you can do is try not to touch your equity, because equity, stock, that's the one that's affected, obviously, with the markets. But fixed income, so bonds, cash, things like that, that are part of your portfolio, aren't really affected. They're kind of your safe haven. And so what you can do is look at and talk to your portfolio manager, which they can do this. Just do withdrawals, one solution, just from your fixed income part of your portfolio for the next couple months until we see what happens. Maybe things rebound and go back up. But limit your losses, because losses occur when you take money out, when it's down. But if you take it from fixed income, you're limiting that and really not affecting your portfolio.
You're getting a lot of inquiries from clients right now who are, you know, not only trying to manage their taxes and everything else, but then now this has all happened. You're getting a lot of people who are concerned, who are wondering what to do. Peter, what do we do?
What do we do? Not as many as you'd think, because if you've been educating your clients and going through and doing constant reviews, and they've seen these things happen before, they've planned for it. And that's the key. You plan for the worst case scenario, and this is one of those worst case scenarios. So you have options and strategies ready that you can put in place right away for these type of events.
Okay, so what are some other things that people can do to make sure they don't lose income when there's market volatility like this? We talked about home equity line of credits.
Very well. Home equity line of credit we've talked about in the past, and that's a perfect one, because if you have a home equity line of credit, you have a lot of room there to borrow money from yourself. You're borrowing from your home. Wouldn't you rather borrow from that, not touch your investments, use that money for income for the next few months, and you're talking about maybe paying 5% on that money? Well, 5% on that money is a lot better than realizing an 18 or 15 or 20%, whatever it is, drop in your portfolio and making that a reality. So use the home equity line of credit, and when your portfolio rebounds and comes back upward, that's 1 month, 2 months, 3 months, whatever it is, then you can pay back your home equity line of credit with that money.
The money that you've gained back and pay it off.
and then pay off the home equity line of credit, because 5% is pretty cheap compared to maybe a market that's 18% down right now.
Okay, so what would you tell an investor thinking about selling off in order to not lose more money? What would you say to that person?
No, kind of find if you can find any cash available, and you should be investing right now. And that's the call I'm getting the most, is people going, should I invest? Well, I said, I can tell you exactly when the worst day is. Ask me in about 3-4 months, and I'll look in my rearview mirror. But all I know is right now, you are probably buying into a portfolio that could be 15, 16, 17 points lower than it was 2 weeks ago. You're buying now at prices that were about a year ago. That's give or take a percent, because that's roughly where we are, is where the markets were a year ago. That's what's been given back. So if you can buy at a discount, buy at a discount, but don't make a virtual loss that you see on paper a reality by making an emotional decision.
Yeah, I know you've talked about that before as well. All right, Peter Sashecki with Everything Financial. Thanks for joining us this morning.